Welcome back. So on this video we are going to discuss understanding smart money concepts. So understanding how the institutions, how the major banks, how they move the market, so majorly how they trade the market, so that you'll be able to follow their footprint. So for example, let's say in the retail world, we were taught to buy when the price is at support and sell when the price is at resistance. So that means that we're taught to buy at support, sell at resistance. So you long from support and then you short from resistance. So if you're longing from support, you have to take profit at probably the next resistance, and then if you're shorting from resistance, you have to take profit from the next, the previous or the previous support below price action. So and now this strategy, we don't use support and resistance. So majorly this is going to show you guys how the banks, they majorly move the market, how they manipulate your stop loss. I assume, or I know for sure, many of you watching this particular video are not really novice. Like you're not really new to technical analysis. So I'm a bit sure you understand what I mean by buying from support and then selling from resistance. So because now majorly this video or this course would be actually, I think majority of the persons that are going to have this course are more of like, maybe let's say advanced traders, you get, so not really like they are beginners. All right, so now let's assume this is my resistance and then I have my support here. I have my support here. Okay, so in the retail world, we're taught to buy where we see the market at support, and then we'll sell when we see the market here at resistance. So let's say in a ranging market like this, what we do then in the retail world, we look for sells here, that's short, look for buys here. So literally the market is ranging, so we'll probably be looking for short and long in between these two zones before and then we are expecting a breakout, you get, so we're expecting a breakout to short to the other side of the market or to long to the other side of the market. So for example, in the retail, for the retail guys, they would want to buy from here, right? Now I believe most of us have had this experience whereby price will chase or hit your stop loss first before coming back to your target, and you'd be like, man, I knew this was where the market or the price was supposed to go. I had it correct, so why would they have to like hit my stop loss and then come back? And then you start thinking, is there a problem with my entry, or is it that but I sincerely don't think it's a problem with you. It has to be a problem of your entry, because you probably entered from the support. So after seeing much of price reaction on this very area, and then you enter your trade here, most times you find that the market will do this, probably put you in a little profit, you get, and then do this, and then you see the market going to this other direction, you get. So let's just say stop like this. Now what really happened here is the market taking you out of your stop loss. Now remember, those guys, the retail traders must have been buying from here and taking profit here, as you know. So they bought here last and they were expecting the price to get here. Their stop loss is around this area here. Now the market is going to come down first, let's say the market first comes down, take out your trades, and then later, you know, moved back up. You get? So this is that stop loss on that thing you know as stop loss on. This is the stop loss on. Now, why do this? Like, why would the market do this all the time, or most of the time? Not really 100%, not all the time. You get? Why would they have to take you out of the trade and then before going to your direction? You were not wrong. You're not wrong saying the market was, the price was going to go to this direction, but still you had to take that loss, right? Now, main reason is that smart money took you out. Like the banks, the major banks, they took you out. This is their manipulation. This is their handwork. Like, this is what they do. They take you out of the market, and then they push to the other side to wherever you thought the market was going before. Originally, they know where the market, or where they want this market to go, or where the market should be going. Right now, they just want to like take liquidity below here. Now, that stop losses we have below here at liquidity. So these guys, when I say liquidity, I mean money, right? So these guys, they come down here, clear that money. Now, what is that money actually? We just mentioned it's liquidity, right? Below every support there's stop loss, and then above every resistance there's stop loss as well, and also above every resistance there is a buy stop order, and then below every support there's a sell stop order, right? People that wants the market to break out from that support and start going down, or break out from the resistance and then start moving up. Right now, those guys that bought from here, they have their stop losses here. Now, the ones that have been selling from here, they also have their stop losses right there. You get? So they were setting their stop losses there. So let's just say the ones that placed a sell limit order from here, they're having their stop loss here. Right now, at this time now, people would actually place a sell limit order here, expecting that when the market gets to the side, they will trade down and start giving them profit. Now, this set of guys will have their stop loss here. Right now, what did the market do first? The market first went down, took out liquidity here. That means clearing the stop losses of the buyers, and then making sure it takes out all the buyers, if not all, but major, buyers from here. That's the retail guys, right? And then moved in that direction for a while, then come back, and then finally going down there. And then when it gets to this resistance, look at what it did. The market also cleared the stop losses of these other guys here trying to sell. Clears their stop loss, and the next thing, let's say next thing you see, the market will also probably retrace to somewhere around here, and could start going up if at all the market was supposed to break out and start an uptrending market. We're going to talk about market structure next, but first, now what I want you to understand here is that this stop loss hunting is the smart money, is the major banks doing their own thing. That's what they do. That's how they trade. They'll first of all take you out of the market before going to your direction. They need to take in as many buyers, and then before going to their way, like they need to take out many buyers. So the retail guys happens to be who these guys are hunting. You get? So now, for example, people have been buying from here. Here's another example, right? People have been buying from here, and then let's say you have your own buy order placed here. Now, smart money or the major banks are going to sell. Let's say they are going to sell from this area, open a sell position. Let's say with like $1 million, right? Open a sell position on this market. You start seeing the market go down. You can never control the market, right? So the major banks, these guys, they control the market. The institutions, they control mostly every move you see on the market. But for us, the retail guys like me and you, we can't move the market a bit. Now, they have to, like, they open a sell position. Let's say they open a $1 million sell position right here, sell limit, and the market start going down. They use this movement to take you out of the trade first, and then some people like the sellers, those who were waiting for the support to get broken, and so they could start selling. Now those guys will have their own buy stop order, sell stop order somewhere around there, saying that once this support gets broken, activate my sell position and keep going down. Right now, look at what this guy did. They activated the sell position right here, they moved down in profit. Right now, remember, they've cleared the stop losses of these buy positions here. Now they moved down in profit of the sell position, and then later went back up again, hit the stop loss of the sell position right here. The person that opened the sell right here, they hit the stop loss somewhere around here, and then came down back again to an order block sitting here before going back up. So the bank sold with $1 million down, took out the buyers, and then activated the retail sellers. And then now let's assume the bank now buys again with let's say $1.5 million, and then the market start moving up again. Now at this point, remember, they had their first position, a sell order. It was going down, they were in profit, but now that this market is starting to move towards this direction, they might be at loss. Right, they might be at loss because they don't just open one sell position here. They keep on opening sell, like they open the trade as it goes. They keep doing that, pushing the market. Right now, let's say at this point these guys would probably be at loss for the old sell position, or probably maybe in little profit if at all they started selling from here or whatever. But remember, they've been selling all through, right, pushing the market down, so they'll probably be at loss here. Now these guys, they don't take losses, right? They either come out of their trade at break even, or maybe they take a little profit, but not loss yeah. Well, most times they might lose, but I don't think with the kind of money they have at hand, they can move the market wherever they want it to go. So they have to, like, they now sold with, let's say they now sold with another $1 million right here, and took the market back down to where they opened the where they opened this particular buy position. And what they are trying to do is coming back down to the side to close their initial sell order that was coming down. Now they will not close that order here in profit, remaining this buy order for this movement. At this point, they'll open another buy order here and take this market to the direction. Now what they did here, they literally just took you out of the market. Now while they were taking you out of the market, they activated the sellers, and also took them out here again. And after taking the sellers out, some buyers would have already gotten here or whatever. They still took those ones out again with this movement before going to their way. So same thing they are going to do up here. I promise this video is not going to be long, but I think we've spent more than 10 minutes already, so I'll try to keep this very short. Again, sorry, we're almost done. Right, so same thing above here. So let's say people that were selling from here, keeping their stop losses here, trying to take profits here, market will first of all take them out, and then come back to this other side. Then as they are coming back here, they will also hit the stop losses of the ones that we are buying, the ones that placed the buy stop order. So people placed sell limit order, and other people placed the buy stop order, trying to say when the resistance breaks, they want to keep going and making profit. The market activates their trade here, and then took all of them out here, and then went back to this area where they started selling again, and then sold finally. So you just have to watch this video. If you don't understand anything, then you still can get back to me here. So I'll see you guys on the other